Good morning, everyone. Ben Buckner and Dan Botze with Ag Resource joining you this morning. The 23rd of September is Tuesday. We've got grain markets doing virtually nothing. Soybean markets follow through selling from yesterday. It seems to be a carryover. It seems like so far this week it's all about Argentina and China. Dan, do you want to go ahead and break down the details of why the soy markets found some follow through selling today?
Yeah, Ben, no, let's do that. We mentioned yesterday the soybean market would be the downside leader, though I think questions are arising in corn whether that, wheat making new lows and soybean making 1 month lows, how long can the corn market hang in? And I think that's a valid question as we go in here today. Let's talk about a little bit where we are here this morning. And we do have China buying soybeans. We hear over 1 million tons or 1 million tons plus out of Argentina. That would be somewhere between 14 and 16 cargoes. They're still asking for offers. Argentina is selling them. This is all related to yesterday's tax abatement, where Argentina moved taxes down to 0%. This caused really strong cash movement across Argentina. The farmer responded, and the exporter then sold the beans to the willing buyer of China. Now, others are seeking Argentinian beans, along with the EU, I'm told, Southeast Asia, but the Chinese have been there scooping them up, and I think China is going to cover itself now into the early part of December with South American soybeans. That window for the United States is shrinking. Remember last year in the September, October, November timeframe, China bought close to 480 million bushels, almost 500 million bushels from the United States. That will not happen this year. So exports need to be adjusted downwards. I think the industry will be doing that. As you also look at Argentina, I think it's interesting to note where September stocks are. This is a graphic giving you corn, soybeans, and wheat stocks as of September 1st. These are estimates. We don't have stocks report in Argentina. Nonetheless, you can see at 67.7, let's call it 68 million metric tons. This is likely the third largest stocks in Argentina. So again, there's plenty of supply for the Argentinians to move. They see this program as worthwhile. You will see all $7 billion of the allocation taken. How quick is going to be the question, but I'm pretty confident that the Argentinian farmer and the multinational will, of course, adhere to what the government has offered and make the sales. And this will, of course, cut into U.S. demand, whether it be for corn, soybeans, or wheat. Again, we focused on soybeans because the tax abatement there is 26%, 24% for products, 9.5% for corn, soybeans, and sorghum. So as you think about looking into the end of the year, Argentina is going to be a much larger soybean exporter. We think the Argentinians can do another 3 million metric tons here. I think that's going to be important. That, of course, distinctly cuts into U.S. demand, unfortunately, for the U.S. farmer. But nonetheless, as you look at this graphic, again, the Argentinians are going to be exporting a fair amount of corn, but a larger amount of soybeans. I wouldn't even believe that this number could be larger. So we could maybe eke up closer to 20 million metric tons on both. And again, this is to the detriment of other sellers, principally at this time of the year, the U.S., because we're in the guts of harvest and we're trying to, of course, get grain out the door because we have logistical problems in the United States not having enough storage capacity. Also this morning, the EU announced it's delaying its anti-deforestation law. Now, this law came out roughly 3 years ago, in which the EU wanted to, of course, look at nations and areas of the world where forests had not been cut for 5 years. If you had cut a forest for 5 years, principally across northern Brazil, and you produce soybeans or soybean meal, that was not eligible to be exported into the EU, and they wanted a stiff, of course, protocol to make sure that it didn't happen. Last year, they delayed it. This year, they're doing it again. This hurts U.S. meal. We know in the United States that we have not deforested across much of the Midwest plains or northern plains. Those areas were deforested hundreds of years ago. And so we were expected and sitting in the catbird seat to sell more meal to the EU. This ruling this morning will pressure the meal market. People had been, again, not loaded up as much as they were last year. But again, the delays is causing credibility problems for the EU government in Brussels. You can't announce these kind of laws and then delay them for 2 years. I doubt anybody's going to pay any attention next year. As you look at the soybean meal chart, I know we've had a rally on short covering, but boy, when you look at a monthly chart, it hasn't been that much. We bottomed at around 270, had a nice $17 or $20 bounce, and here we are again. I would imagine with the EU law and the availability of U.S. meal coming online as more crushers in the United States ramp up operations, we will see the meal market back in that 270 to 250 range again as we look at the end of the year. And also then looking forward in terms of, where we're at in terms of the soybean market, you can see here that the soybean market has been holding in a broad range for a long period of time. We think that will persist. We don't believe anyway that that will change going forward. As of course, Chinese are absent, we probably will go back to last year's harvest low, somewhere around 930. Now, timing is everything in this. It probably is the middle of October to the middle of November when that low would come in. Whether or not we get a USDA October crop report will be key. If the government shuts down, that report will be delayed. But as you look at the soybean chart here, a test of those lows seems likely due to, of course, China's absence and, of course, now, of course, problems with EU meal and, of course, the Argentinian aggression. As you look at the corn market, we can see just a range trade. I think we're going to fall into a range. You can see the red line giving us the bottom extent of that range, 370 to 380. The upside's probably limited to 430. And so as you think about the corn market, Ben, I'm just not excited. I think the corn market goes sideways for a long period of time. Though, again, I do understand all this talk about if we have this abundance of world wheat, we need to feed more wheat, and that will, of course, cut in the future corn demand. I'm worried about corn exports beyond the first quarter of this year. We'll see how that all plays out. But in a general sense, we are still negative. Farmers need to be rewarding rallies, and especially doing so not only this crop year, but next crop year. So back to you, Ben.
Yeah, very good rundown. And we'll say it again, risk management. We are here to help, of course. And I think the thing that we keep running into, and we'll be hyper-focused on U.S. yield, Chinese trade negotiations, Argentine tax policy, but just want to be conscious that there's a lot of stuff in the U.S., outside of the U.S., so think about that as it pertains to the global story for the next 6 or 12 months. So be prepared. It's still our message, and thank you for watching. We'll be back tomorrow with everything you need to know. Thanks. Bye.